of questions, and I'm sure the Governor will add quite a bit on the monetary policy front. I thank you.
Thank you very much, Honourable Minister, for giving us that detailed review of what has transpired in 2022 and what we expect in 2023. I know you have a difficult act to perform, so much to say and not enough time. Thank you, Honourable Minister. Our next presenter is the Governor of the Reserve Bank, Dr. J.P. Mangudya, who is going to discuss the monetary policy, complementing the fiscal policy. Dr. Mangudya, you have got the floor, 20 minutes.
Thank you, Chairman, Retired General Nambuya. Let me recognize the Speaker of the Parliament, Honorable Alfred Mdenda, the President of the Senate, Honorable Chunamona, the Minister of Finance and Development who is here, and all other ministers and deputy ministers that may be present in this meeting, all honorable members of Parliament, a very good morning to you. Last time when we were in Victoria Falls, the economic landscape was different from today. So thank you for inviting us, Parliament, to complement the Minister's presentation, which is just given today. And I only have 8 slides to complement the Minister. So definitely, Chairman, I will save on time because the Minister has said a lot of things which are similar to what we're going to say, because we are complementing each other from fiscal and monetary perspective. So I shall concentrate more on the monetary side. The next slide, please. The next slide is just introduction to say where we are and where we are going. The fiscal and monetary measures that have been put in place over the past 3 months have been very effective to deal with the challenges that were bedeviling the economy. We saw the ugly head of inflation in the first half of this year and rose dramatically in the second quarter of the year. Much to our concern, great concern I will not say, leading to the measures that were put in place that the Minister has eloquently explained. We've also seen that a close collaboration working together with the fiscal policy, the FIU, and the Central Bank Monetary Policy have been very effective to deal with the challenges that we're facing as a country. Let's had 2 problems, or 2 challenges: high inflation and the exchange rate that was very volatile. Those are the 2 measures that we're dealing with, because our inflation depends mainly on the exchange rate, mainly because of the past experiences of hyperinflation and also because of the current reforms. So people lost money, people lost the value of their money over the past 10 years in 2009 and 2008 and also 2019. So that had conditioned our people, the society, to deal with whenever they get money, they try to spend it as quickly as possible. So it was very important to ensure that that money is not very easily available. That's why today the local currency is in no short supply. And we've also seen that the government is not relying on any overdraft from the bank, and that has helped quite a lot, as the Minister was saying. The next slide. So, if you look at this economy, in terms of the foreign currency situation of the country, it's very stable. Our exports and foreign currency receipts total 8.4 billion by the end of September this year, compared to 6.1 billion payments during the first 9 months of the year. That gives us a positive balance of $2.3 billion as of September. And where is that money? That money is seated in the banks at 1.4 and close to $1 billion being loans and overdrafts in foreign currency that banks have given to their customers. And we're very happy about that. Because if you could then compare, or combine the 1 billion plus the 1.3, 1.4 billion, you get it to 2.3. So we can see the numbers that the numbers are positive, and banks are doing their level best to assist their customers. So if you look at the orange there, graphs, those are the diaspora remittances, and the blue is the total. So at 9.6 billion, which was 2021, was the highest ever foreign currencies that Uganda's country received. The other one was 2013. And we're expecting this year to be above that, maybe around 11, 12 billion by the end of the year. So in terms of the balance of payment situation for the country, very positive. Next slide. Where is this money coming from? This money comes from export proceeds at 5.4 billion this 9 months of the year, compared to 4.1 billion last year. Diaspora remittances, 1.2 billion in the first 9 months of the year, compared to 1 billion last year. The embassies and NGOs bring in 860 million in the first 9 months of the year, compared to 780 million last year. If you look at the foreign investments, it's also went up from 53 million to 131 million this year, given the 8.4. So this is the breakdown of the receipts that this government has received. And this money is, as I said, is there in the banks and also be given out as loans and other overdrafts to their customers. A growth of 25% on a year-on-year basis in September, as of September. So the next slide, please. So our balance of payment position, as the minister has said, has remained strong. And it's expected to remain strong in the next year as we go into 2023. We're going to remain in surplus position on the current account, on account of what I've just said. The next slide is on the gold coins. We've introduced gold coins basically for two reasons: to provide an alternative investment product for those who want to invest in foreign currency-based products, and also a secondary to mop the excess liquidity which was going to go into the parallel exchange market. It has worked very well, to the extent that as of the 14th of October last week, 10,400 gold coins of 1 ounce have been purchased, have been sold to the public, mopping, as the minister have said, $10 billion from the market. That $10 billion was going to chase foreign currency. This has led to stability in the foreign exchange because all the gold coins are being sold at the official exchange rate. 35% of the gold coins have been purchased by individuals, and 65% have been purchased by corporates, mainly asset management companies, to store value for their customers. This product has worked well, and we shall be introducing the 10th quarter and a half ounces of gold coins by mid of November this year. On the exchange rate, we anticipate the exchange rate to continue to move towards convergence. As of now, we've seen that the power exchange rate has declined between 620 if you go to balance about 600, and 720 if it is for transfers, and that is within the willing buyer, willing seller rate, which yesterday was 629 to 1. And if we are putting the 10% that's allowed by law on top of that, that goes to around 700. So the willing buyer, willing seller is being used as a benchmark both for the auction and also for tracking the developments on the power exchange market. And we are therefore within the 15% international benchmark for the levels, the difference between the premiums, between the exchange rate in the power market and the official exchange rate. So we are seeing stability in the exchange rate. We are seeing stability in the inflation. So the next slide is about inflation. Our outlook of inflation is very positive. We reached a peak of 30.7%, as I said, in the second half of the year 2022, and to great disappointment and concern. We do many measures together with government as much as possible, which led to its decline in the inflation in September to 3.47%. We are expecting inflation to continue to go down below 3%, between 3 and 5% over the next, in the outlook period. Definitely in October, we're expecting to be lower than that because of the measures that have been taken. And if that continues to happen, then we review the interest rates after December, because we also know that there is a downside risk of high inflation, of high interest rates, which is basically the non-performing loan in the banks, and also that business is constrained. But we have to take that measure to ensure that we stabilize inflation and exchange rate. Therefore, that's why we have a foundation for growth which is stronger, but it has to be done. So we expect inflation to go down, and definitely we expect inflation by June next year to be around 50%. The key takeaways from this slide, as we complementing what the minister has just said, a number of key takeaways that we believe are necessary at this August House as we meet with the parliamentaries and the ministers, just to share and also to shape the country. The economic outlook remains strong as requisite measures have been put in place to stabilize the economy. The past drivers of exchange rate volatility have been identified, and we are happy that the minister and government have put in place the value for money unit to ensure that at least we do move in that direction to ensure that the prices remain reasonable in this economy. The monetary conditions are tight enough to sustain exchange rate stability. I heard and I read some people saying that is temporary. No, it's not temporary. What we've done is to ensure that it's sustainable. We want a durable, sustained policies to go forward. Exchange rate stability, therefore, we anchor inflation expectations. And as we said, we expect inflation to be around below 5% in the outlook period. The current measures definitely will help us to reduce inflation and to grow this economy. And we've, as I said earlier, we are happy with the strong coordination between the monetary policy and fiscal policy. We want to thank the parliamentary committees which we have set in, and I think if you recall in those meetings, this is what we've been discussing, those parliamentary committees, and we're very happy that you have been calling us into parliamentary committees. We've taken heed of what you've been saying, and today we are saying that what you've told us to do, we are doing it. Price stability is good for the national budget to avoid, as the minister did last time, high supplemental budgets. If there is price stability, the supplemental budgets also be minimized because money will be having value for money, and that it will be stable. And therefore, going forward, Mr. Chairman, what we are saying that we need to stay the course. So going forward, we're going to stay the course, which means that we're going to maintain the measures that are there, making them stronger, fine-tune what needs to be changed, to be fine-tuned, and reduce or moderate the interest rates the way we think that they need to be done, depending on the level of inflation, and on the exchange rate to continue to pursue the willing buyer, willing seller, and to continue with our auction system. In this case, we have seen that the numbers of coming to auction have gone down mainly because of lack of local currency, and therefore going to maintain, and as the minister said, under the multi-currency system. So we are very happy, Chairman, as we see today, that the measures that we have put in place, complementing government, complementing the minister, what you just said, we are happy that we are on the right trajectory. I want to thank you very much.